Disclaimer. This video is for entertainment and educational purposes. It is not a suggestion to buy, sell, or hold any asset. Please do your own research and due diligence when choosing what to invest in. Now, on to the analysis.
Hello, ladies and gentlemen. In today's episode, we're going to talk about this new put option that I sold today. As you can see, it has nothing to do with Bitfarms shares or Bitfarms stock. It's not an option for Bitfarms. It's an option for this ticker symbol, BB. What ticker symbol is that? That's Blackberry, ladies and gentlemen. I finally pulled the trigger and decided to sell a put option on this company here, Blackberry. Many people are familiar with that one. If you don't know why I decided to invest into this company, you could watch the video that I posted on this company in the past. I'm going to put the video that I did on Blackberry stock. I'm going to post it at the end of this video, so you can take a look at it and see why I decided to invest into this company and use the wheel strategy with this company going forward. So what happened with Bitfarms? Well, let's see, why am I not selling any more options on Bitfarms at the moment? Well, if you remember on my last episode, I talked about how I wanted this stock to go back below $3 so that I could sell another $3 put on this company, right? Expiring August 16th. But it got really close. It got really close. It got down to $3.02, right? $3.03 after hours. So it got really close to going back below $3, but it didn't quite make it there yet. So if we look at the options on this company now, if we want to sell a put, right? Sell a put expiring August 16th, we'll see here that the $3 put is only selling for $40 at the moment, right? And I already have two contracts here that I sold for an average of $65, right? That's the average that I sold these two contracts for. Let me show you that real quick. I can show you that here. The $3 put. I got two of these contracts, and my average that I sold this for was $64, right? That was the average that I sold it for. So my break-even price is $2.35. Okay, so it's $65 is really what I sold it for. All right. So since Bitfarms did not go below $3 again this week, who knows what's going to happen next week? But for the moment, it's staying above $3. So it looks like I'm not going to be able to sell another $3 put on it. Right? It's not going to be worth it for me to sell another $3 put. So that is why I decided to now start selling options on Blackberry, this company right here, Blackberry. So let's take a look at what I did with Blackberry. I sold an option on Blackberry, okay? As you can see in my history here. I made $28. I sold this $2.50 put expiring next Friday, June 28th. And I sold it for $28. So that means that, let's take a look at what that means, ladies and gentlemen. When you look at selling options, right? You go to the options, chain here, and we're going to take a look at the one expiring June 28th. As we can see here, selling a put, the $2.50 put, right? When you sell a put option, ladies and gentlemen, you need to have the collateral of how much it will cost you to buy 100 shares of this company here. So if you're agreeing to buy 100 shares for $2.50, you need to have $250 in collateral. All right. Notice what it says here. Okay. See, the estimated credit here is going to be $26. All right. Okay. Now, let's go ahead and review this order. Okay. So you see what it says here, collateral, $250. I'm going to receive $26 minus the transaction fee. Okay. You're agreeing to buy 100 shares of BlackBerry at $2.50 on or before June 28th. If you aren't asked to buy BlackBerry by then, you'll keep your collateral and the full $26 credit. You are also paying regulatory fees of 3 cents per contract. Okay. So that is what happens when you sell a put option. So that is what I did today, except I sold mine for $28, right? I got $28 for it, minus the transaction fees. Okay, ladies and gentlemen. Now, why did I decide to start selling BlackBerry puts? Well, they're going to have a pretty busy week next week, right? So that's why I decided to pull the trigger on them this week. Let's go ahead and look at their website and see what's on the agenda for next week for BlackBerry. See here on Tuesday, they're going to have the annual meeting of shareholders. Okay, Tuesday at 1 o'clock. So it's gonna either bring the stock up or down, right? And then on Wednesday is when their earnings report comes out for the fiscal year 2025 first quarter results, Wednesday. All right. So that is why I decided to sell options on BlackBerry starting this week. All right. Because now notice I sold it for $28. I'm agreeing to buy it for $250, right? So that really means that I'm really buying these 100 shares if the price stays below $2.50 by next Friday. I'm really going to be buying them for $222, right? $222 because I got paid $28 for this contract. So that means I'm really buying them for $222. Okay. All right. So that I hope that makes sense to you. And as we can see here, so $2.22 is what I'm really buying it for. Now notice here, ladies and gentlemen, look at the 52-week low on BlackBerry stock. The 52-week low is $2.23. All right. So you see, I don't think BlackBerry is gonna fall below $2.22. So, but I'm still hoping that it stays below $2.50 because that way I'll be able to buy 100 shares of BlackBerry stock for a discount, right? I'll be buying them for $2.22 per share. And what is it trading at right now? Right now it's trading at $2.35. So as long as it stays below $2.50 by next Friday, I'll be buying them at a discount, okay? Right? So that is what I'm hoping for, okay? Once I have those 100 shares now, then I'll be able to sell a covered call, and I can pick whichever price I want to sell the covered call at, whichever strike price, right? So let's take a look at that right here, ladies and gentlemen. Let me show you real quick. If we sell a call, okay, let's say we sell a call expiring in 2 weeks. If I do the $2.50 call, then I can make another $10 on that. Okay, so that'll be $38 that I make on my $250 investment. So that's over 11%. Okay, that's over 12% even of interest that I'll be making in about a month on my $250 investment. Okay. So 12% is a good return on my capital, all right, on my investment. All right. But if I wanted to make more of a profit, if I wanted to make a capital gains on those 100 shares, then I could choose the $3 strike price. Okay. If I choose the $3 strike price, I'm only going to be getting $4. Okay. But if BlackBerry does end above $3 when the contract expires, then I'll be also making a capital gains of $50. So the total that I'll be making profit would be $54. Okay. So that is what could happen if I end up owning the 100 shares of BlackBerry, right? That's what I plan to do. So but the first step, of course, the first part of the wheel is to buy the 100 shares for a discount. So we're going to have to wait till next Friday to see if I'm able to buy those 100 shares. If the price of BlackBerry stays below 250, those 100 shares will be mine, and I would have gotten them for a discount. So that is my goal. That is what I'm hoping for. That will happen by next Friday. Okay. But it looks like this is going to be the last contract that I'm going to sell this month. We wasn't quite able to beat last month's passive income. You remember last month I made $363 in passive income, but this month I've only been able to make $283 of passive income. All right. So, I mean, I still was able to beat my first 2 months, right? The first month, which was March, that I started using the wheel strategy in the stock market, I only made $117. The second month in April, I made $172. In May, I made $363. And this month, it looks like I'm only going to be able to make $283 of passive income, right? Which is still good, right? Ladies and gentlemen, as you can see, most of my passive income, I keep it here. I save it up here on my buying power so that I can use it in case of an emergency if something comes up, okay? So that is why I keep my money here that I make selling options. I keep the premiums right here in my buying power, okay? So unless something incredible happens with Bitfarms next week, this will be the last option that I sell this month, okay? This $2.50 Blackberry put expiring next week, okay? Now, what's something incredible that could happen that will cause me to sell more, to be able to sell another option next week? Well, if Bitfarms shares, if some incredible news comes out on Bitfarms, like for example, if they hire a new CEO and this CEO is an amazing CEO, right? Because right now they have an interim CEO, right? They're operating without a CEO at the moment. So if next week they come out with some news where they hire a new amazing CEO, that could send the stock rising up to $4, maybe even past $4. So if that happens, ladies and gentlemen, these $3 calls that I have right here, two of them, that's going to most likely cause 200 of my shares to be called away for $3 a share, right? So that's going to mean that I'm going to get $600 credited to my account because I'm selling 200 of my shares for $3, okay? So these options could be exercised next week if Bitfarms does go up above $4, right? It may not happen, but it's possible, okay? And if that happens, as you can see here from my dollar cost average, right? Each of my shares of Bitfarms cost me $2.53. So if I'm selling them for $3 a share, I'm making 47 cents per share, $47 per contract. That's $94 in capital gains that I'll be making on my 200 shares. All right. And that's not counting the money that I already made selling options, right? Selling the puts and calls on this. All right. Because let's go take a look at that option again and we'll see how much I made there selling these calls. Okay. Let's take a look at my average credit here. So I made $42 for both of these contracts, right? That's the average for both of these contracts. 21 times 2, that's 42. $42 that I made already, right? So that means that I really made $94 plus 42, right? So that would give me, let me see, 136, $136 in profits that I'll be making from completing the wheel with these two contracts, right? These two $3 strike price contracts. Okay, so I hope that's making sense to you, right? So that is why it looks like that will be the last option that I'll be able to sell this week, this $2.50 Blackberry put option, okay? All right, so now, see, there hasn't been any news now about the poison pill this week coming from Riot or Bitfarms. So it looks like for the moment, the poison pill has been effective in causing the buy-in that's been coming in from Riot Platforms on Bitfarms shares. Okay, they've been buying up a lot of Bitfarms shares because they want to try and do a hostile takeover, but it looks like the poison pill has been effective in stopping that from happening, okay? Why I say that, right? Because Riot Platforms has not continued buying more shares of Bitfarms, okay? Now they are at about 14% ownership of Bitfarms company right now at the moment. So let's just do a quick recap of why the poison pill has been able to work, okay? We take a look at my market value here, okay? Now, Riot Platforms market value of Bitfarms shares, since they own 15% of Bitfarms, their market value at the moment is around $187 million, okay? Now let's take a look at Bitfarms market cap. Bitfarms market cap is $1.25 billion, okay? So if Riot Platforms decided to buy more shares of Bitfarms and own more than 15% of Bitfarms shares, well, their market value would go up at the moment, right? It will go up to around 100, let's say 190 million, right? So that's 3 million more than what they have right now. Let's say they did that. Let's say they bought more than 15% of Bitfarm shares and their market value went up to 190 million. Well, not only will their market value go up, but also Bitfarm's market cap would go up. So it will go up. Let's just say it goes up to 1.3 billion. All right. So Riot buys more than 15% of Bitfarm shares. Their market value goes up, and Bitfarm's market cap also goes up to 1.3 billion. Well, that is going to cause the poison pill to get triggered, right? The poison pill will take effect at that moment, and it will cause more shares of Bitfarms to be issued into the market, okay? That is going to dilute what Riot owns of Bitfarms, their ownership, their 15%. They're going to get diluted back down to 15% ownership of Bitfarms. So that is going to cause their market value to come back down, okay? It's going to cause their market value to come back down. At the same time, Bitfarms' market cap is going to come back down. It's going to come back down as well. But all of that money, all of that capital that Riot invested into Bitfarms, it has to go somewhere, right? Where is it going to go? Well, it's going to go to myself and all the other Bitfarms shareholders that are not affiliated with Riot Platforms, okay? So basically what's happening here, and the reason why Riot doesn't want to invest any more into Bitfarms or buy any more than 15% of Bitfarm shares, is because if they did that, they would really just be buying myself and all the other Bitfarms shareholders. They will really just be buying more shares for us, okay? Because they will get diluted, their market value will come back down. Bitfarms market cap, Bitfarms is not making any money from the poison pill. They're not going to be making any money from it, okay? So who's getting the money? Well, myself and every other Bitfarm shareholder will be getting that money. My market value will go up, and so will all other Bitfarm shareholders' market value. All right, because we will be receiving the diluted shares that go into the market. Okay, so that is why Riot Platforms has chosen not to continue to buy more shares of Bitfarms. So it looks like Bitfarms was able to call their bluff, and Riot Platforms has paused on their hostile takeover for the moment. Okay, so that is good news, ladies and gentlemen. But I really would have wanted to own more shares of Bitfarms for free, but that's okay. All right, we'll see what happens in the future. So, ladies and gentlemen, that is the video for today. I showed you why I bought or why I sold this $2.50 put, right? Blackberry is going to have a busy week next week, so their stock price could go up or down, and I'm pretty sure it's probably going to go up and it's not going to go below its 52-week low, which is $2.23, right? Since I made $28 on this put option, if I do end up owning 100 shares of Blackberry, I would have bought them for $2.22. Okay. And that will start the wheel for this company right here, Blackberry. All right, ladies and gentlemen. Bitfarms, for the moment, I'm done selling options unless their stock goes down under $3, then I'll probably be using more of my money that I have saved up here from my previous options that I've sold, the premiums that I've made on other options that I've sold. I'll probably be using this money here to sell another put option, right? But that's only if Bitfarms shares falls below $3 next week. Okay, or if Bitfarms stock skyrockets to $4 and above, and then 200 of my shares get called away for $600, then I'll have also more capital to sell another put. All right, either on Bitfarms or Blackberry. All right, I haven't decided yet, but I will let you know next week. Okay, ladies and gentlemen. So this month we were not able to beat last month's passive income, but that's understandable because you see all of my options are expiring in August, right? All of my options on Bitfarms are expiring in August. Only the BlackBerry one is expiring next week. Okay, so more likely, most likely, I'm not going to be able to sell another option this month. All right, ladies and gentlemen. I hope that all of this makes sense to you. If it doesn't, please follow me on Instagram or Facebook. You can send me a private message there if you would like to know more about how I sell these options. That way you can also know how to start investing in the stock market yourself, save up money so that when you need it, you have some money here for emergencies, right? Ladies and gentlemen, this is better than putting your money in the bank. Why? Because when you put money in the bank, you're not going to make this amount, right? See this $394 here? This is what I made so far. I mean, this is what I have left over of what I've made this month, okay? And last month, this month and last month, okay? So you're not going to see this in your savings account if you just put your money in your savings account, okay? I've had more than $6,000 in my savings account, and I only make like 5 cents on it, interest, okay? So this is way more than that, right? Even if you put your money in a CD, right? In a CD, which is where you can make the most interest in a bank, right? Even if you put your money on a CD, you're not going to be able to take this money out, right? Unless you get penalized, right? You'll get penalized for taking your money out. I could put this money back into my checking account anytime I need to, okay? All right. And if I needed to, in case of an emergency, I needed to take $1,000 out, right? You see, it's not here on my buying power, right? All I have to do is look for an option that I'm winning, right? A trade that I could just trade one of these options here that I'm up on. Like for example, this $2.50 put. I have 5 of these. Okay, that's $1,250 right there. Collateral. Okay, take a look at this one for example. Okay, I've made $47 per contract, right? Using $250 as collateral. I've made $47 each, right? Look at how much it's trading at right now, $18. Okay, so I could buy these contracts back. I could buy these and keep more than half of what I made on it already, right? $47. I could keep more than half of what I've made on these on the $1,250 collateral that I have for these 5 contracts here. Okay. And I could free up my $1,250 that I have in collateral and keep most of the money that I made selling these options before. Okay. So that's all, ladies and gentlemen. I'm not really going to lose money. Take it if I needed my money back for an emergency. All I have to do is buy back one of these options. Like I said, one of the options that I'm winning on, that I've already made money on, right? And just buy them back and free up that money that I have in collateral. And then I'll be able to have that money in case of an emergency. So if you put that money in the bank, ladies and gentlemen, you're not gonna be able to receive it without getting penalized. Okay, you're not gonna be able to take your money out without getting penalized for it. So that's why it's much better to invest your money in the stock market than to deposit it into a bank. Okay. So if you're still not comfortable, doing that, ladies and gentlemen, just keep watching what I'm doing and see how easy it is to invest in the stock market and save up money and make passive income every week investing in the stock market. I make passive income selling puts and calls. And now I'm also making passive income on the capital gains that I have right here. As you can see here, today it's $743. That's how much capital gains I've made on my 1,200 shares of Bitfarms. Okay. This number fluctuates though. It goes up and down. All right. Until I finish actually selling my shares, that is when I will actually make these capital gains right here. Okay. For the moment, I'm still happy selling calls on them and puts and making passive income. So I'm for the moment, I'm just happy with that. Okay. I don't care if my money or my shares are being held up in collateral. Okay, because I know that either way it's making me passive income. All right. So that's the video for today, ladies and gentlemen. I hope you had a great week, and I'll see you in the next one.
This has been another video from Dad's Market Stats. Thanks for watching. Don't forget to subscribe, comment, and like the video. If you know someone that can benefit from these videos, make sure to share it with them as well. Until next time, and remember, let's grow together.